a lemon plushie.
Yeah,
Yeah.
that would have been awesome.
Sounds coming through good.
Yeah, I think. Let's see. Let me see if I can hear me.
Sounds coming through good. I've upgraded because
Yeah,
last week
I
someone was
think.
saying that my audio wasn't great, so I've
Mm,
got the old got a microphone this week.
nice. Okay. Cool. Yeah, it sounds great to me. It usually
Thanks, man.
sounds pretty good, though, if I'm honest. Or I've never had issues with it.
Oh, okay. Oh, okay. Yeah.
I hope everyone's good. I feel like I haven't been here in a while. I skipped a week on accident, but it feels like a long time.
That's all right. That covered for us.
Nice. I'm sure it was amazing.
And you said you watched it, so
Oh yeah. Oh yeah, that was last week's stream. That's right. I did watch that.
yeah.
I liked it. I think I was the first YouTube like.
Oh, look at that.
Got anybody in yet? It shows me a 0.
You got 2, but that's probably you and me.
Oh yeah, that makes sense.
We are streaming at the hour before London though, so I'm not sure much is going to go on.
That's right. Man, daylight savings time. Ugh. They're supposedly going to uh eventually. I mean, they always say that in my country. They're going to do away with it eventually, but we'll see. I feel
You
like
got to think about the farmers though.
yeah, I feel like we can just schedule things around them more than change the clock themselves. I feel like it seems more
do, you,
logical nowadays.
do you know that the whole of China only has one time zone?
I did not know that as big as China is.
Yeah. If you look at, say for instance, I don't know, the time in Beijing. In fact, let me get it up. Who said hello?
Hey,
Hello,
how's it going?
Morkov,
Makove. Makove.
Makove. So let's say time
We'll go ahead and get started here in a minute, guys.
in Beijing.
No, we got some people in. Right on.
It's 3
Welcome.
p.m. in Beijing. And let's go with wherever this place is. It's also 3 p.m.
Hmm.
And the distance is 3,400 kilometers apart.
Oh wow, that's at least a time zone apart here.
Yeah, I would say that's a couple of time zones, I reckon.
Oh, probably the wrong user, but not trying to bother changing. Oh, that's funny. You probably just logged in on someone's computer or something. Okay, well, I'm gonna go ahead and throw us up. Do you need to show your screen? I don't really have anything to show, but we can look at today's market.
Say what? Yeah, we'll have a look at today's market. Currently, EU and EGU is coming back to the high of the Tokyo session, so that's always nice.
Oh, let me start with my disclaimers. First of all, this is not financial advice. This is for education and entertainment purposes only. All the markups that we do are not a signal of any kind. Always do your own due diligence. Trading is a high risk activity. You can and will incur losses. So use proper risk management and only risk capital on systems you've tested yourself. That being said, thank you guys for coming.
G'day, Pat.
Hello, everybody. Hello, Pat.
I have been marvelous. I have not eaten in 75 hours, but I will be having a slow cook beef shoulder in roughly 2 hours. So looking forward to that. How are you, Jezza?
I'm doing well enough. Just a lot of,
Yeah.
yeah. I mean, I've
How's
learned.
the new business going?
What's that?
How's the new business going?
Uh, Everything's well, like on the financial side of things. There's just a bunch of other things that you can't really, that you can't work your way through. Like work
You
as in
can't
like,
project.
what's that?
Can't project.
Yeah.
FYI, we're still on the stream is starting soon. Oh no, there we
Oh
go.
no
We got it. Never mind.
no.
No,
Um.
sorry. I for some reason it doesn't keep up with the live
Oh, sorry.
when I'm looking at it, so it's all good.
Um.
Anyway, as you were saying,
Sorry. Yeah, so there was a couple friends with some health issues all at the same time, and um, a couple other like life things. And so I'm like grappling with the fact that, yeah, as much as I've accomplished and how much my life has changed, there's some things you just gotta live through and stuff. So, um, I'm doing well though. Yeah, I'm just grappling with a lot of things that are happening all at the same time, funny enough, that are completely unrelated to business or finance or trading or any of that kind of stuff.
that's just stuff that life just throws at you, unfortunately, isn't it?
Yeah, oh yeah, definitely.
By the way, Lemons, you should really go snowboarding in Turkey. Place is called Erzurum Mountains. Why didn't you let me know that when I was in Turkey only 9 months ago
That sounds amazing.
for my 40th? I could have. I don't think probably there would have been any snow at that point. But
As a matter of fact, if you guys
well,
want to post in the Discord your favorite spots to snowboard, either in like general or you can put them in my chat or whatever. Eventually, I want to do a snowboarding trip where I go to all the best spots. I love it. So, yeah.
everyone constantly. I mean, obviously it takes way too long to get to places in America and Europe, but um, everyone always says that Japan has the
I've heard that.
like because of something to do with the humidity or something like that. It's always a great place. It's got really dry powder and really nice deep snow. Um,
It makes
so yeah,
sense.
I'm hoping to do that at some point.
Yes, same. Japan's on my list anyway. Oh my gosh, man. So many places in Japan I want to visit.
Oh, Japan's awesome. I mean, I haven't been there since 2008 now,
Dang.
so that was a while ago.
You make me feel young, man.
But my niece is into the whole manga and all that sort of stuff. So I think she zero lineups, first tracks on all powder. Well, that's in Turkey, is it? I assume. Japao.
The lineups are insane.
We are going there next year, but the lineups are insane. Yeah, yeah. I've got a couple of friends that are going up next year, but I don't think
Chappelle, that's
unless
hilarious.
I end up making a killing this year on the old market. So yeah, I don't think I'll be. I've done 3 big trips in the last uh, 14 months, so I don't think I can. I don't think I can. I could afford it, but I don't think I. I don't think I should do it.
I get I get one a year. I have to travel 3 times a year anyway between 2 states, so I get one trip
Yeah, yeah,
a
yeah.
year. And
Fair
ah
enough.
man, yeah. So I'm like I have like a list, but I'll get through it eventually. Anyway, let's
Yeah,
go. I
yeah.
got your screen up, so let's go ahead and take a look at today's market. We can
Oh,
see.
okay. Yeah, there's nothing much. Uh, the only thing that I'm kind of note that I was noticing last week is we're kind of following this kind of trend line at the moment. Price has actually gone above here and kind of just grabbed a little bit of liquidity from there. How do you feel about this being a break? I don't feel like this is a good enough break I think this is more of a liquidity grab in my opinion.
Let me see. Like the top of
Yeah,
this range right here.
yeah. If we look at here, like this push down,
It's
like it has.
so. Can you let me see the line? Yeah, the fact that so here's my rule on that, guys. Let me put the line where the top liquidity point is. So if you guys
Yeah, so
look
it
at
has actually pushed through a fair bit, but
yeah, well, if you look at it, it's what did it
sorry.
do with that liquidity? Did it skyrocket past it? Did it trigger all those stops and continue the trend, or did it stop and pull back? Now, it did not pull back and break demand or anything, but it's pulling back and it's pulling back after taking some deep liquidity. So to me, it tells me that took that liquidity and it could start a trend pullback. I would be wary of that. It's kind of bearish to me. That does look like a sweep more than
Yeah,
a continuation just because it didn't immediately take off. It kind of pulled back immediately. Didn't go that high.
yeah. And so yeah, I haven't really been looking this week, but I have kind of kept my eye on this kind of trend line. In fact, I reckon even if we extend this out, you can almost treat. Sometimes I like to treat this, and then I have the 50% mark almost as a premium and discount zone here as well. So if we're, for instance, here we're in a big premium zone, and we also get up to a premium zone here, then I would generally be looking for breaks to the downside, which we haven't. We've got one here above the line here. So we're in a premium here. Here is another spot. We do get a break to the downside.
So, look,
And
what
we
time
do.
frame are you on right now? Because I see a bullish
Is it
maneuver.
a bullish maneuver?
Yeah, we have a liquidity sweep of the relative equal lows and that kind of sweep of it down to the deep demand there, and then it flips bullish, and then that demand zone holds, as far as I can see to the right. What time frame is this though?
It's 5 minute.
Oh, okay.
Yeah. So yeah, I mean, it's interesting that you'd be looking for that because I was actually, like I say, I was looking for more sort of bearish moves after we had the push above and then coming. So this one here, I was looking at that. Every time it went bullish, I wasn't particularly looking for a move. I wasn't around for Mondays, but this one would have been quite nice for me. And I think if I was to put up, I mean,
Yeah, no,
OGE. So here we go. There's my stop loss. There's my entry, my take profit. Would have taken a little bit of time, but this would have come pretty close. But yeah, this is the reason why I have that little extra, what's it called? Stop loss buffer. And obviously now I think we're just starting to get into sort of a pullback range. So yeah, I wouldn't be when it comes to the pullback. I'm generally not looking at things when they break to the bull side. I will be looking for things to break to the bear side and
yeah, I
taking
just meant
advantage
at
from that.
well, depending on the time frame. I was gonna say on a higher time frame, at that moment there at the bullish side after the pullback has happened, that is kind of like a bullish maneuver. It took liquidity and then flipped with the liquidity, but it's a 5 minute time frame, so it's not really that much of a
Yeah, yeah.
big deal.
But that's the only thing that I've been looking at so far. Is there anything that you've been looking at?
No, no, I was just getting into the
On to,
market today, and so it's gonna be great. We get to take a look at what my trading week's gonna look like right now. So the only
on
markets
to
I'm really looking
trading.
at are GU and NAS. Let me throw up my screen.
Yeah, I just pip Pat on to trading. What's a realistic pip to aim for swing trading for
Oh,
both stop loss and
oh, swing
take
trading.
profit?
Well, it depends on your definition of swing trading,
The
because I use the 15
Yeah,
minute to swing trade, quote unquote, and then I have position sizes that are my real swing trades that are like investment. I don't, okay, man, I do not want this taken out of context. I don't use a traditional stop loss on my position sizing because what I'm doing is I dollar cost average in a percent of my portfolio, which is a similar concept. So it's not a dollar amount stop loss, but it is still a risk profile system. I don't dump all of my capital in a trade or a huge percentage of my capital all in one trade or anything like that. I dollar cost average in my total position that I'm willing to risk on a position as the market does more and more of what I want it to do, or as it gets closer and closer to a point that I'm hoping to buy at or something like that. Um, and so those are kind of the two ways I swing trade. So pip position, I don't know because I do assets that are weighted against the dollar when I'm dollar cost averaging in, and so I'd say weighted position is percentage based on what the asset is worth. And then as for the trades that I'm talking about on the 15-minute that I show in my trading, if you're using 15-minute zones, and you have a nice tight entry, usually like 15 pips, something like that. 10 to 15 pips is a tight stop loss. 20 pips is like a good healthy stop loss. And I'd say for a target, I'm usually looking at minimum 3R. I don't really get that interested in something that's less than 3 times my risk, so 60-ish pips, something like that would be a healthy range for the type of swing trades that I look for. If we're batting for the fence, meaning the 4 hour is, oops, let me see. Do I have my chart up? Yeah. So I have a 4 hour chart right here. So for example, let's say I wanted to get in on this move down here and ride up to the high if I think that's where it's going, which right now I kind of do. Um, but let's just say that's what I think is happening, and I've got down here and I'm on the 15-minute and I have a 20 pip stop loss. That's where your target can be hundreds of pips, right? Like literally hundreds. It depends. It's case dependent. You're on a 4 hour chart, but it's usually hundreds of pips. Um, that's rare though, and I had another live completely about how rare that is oftentimes, and then living through that is sometimes a nightmare, and sometimes it's not. Sometimes it's euphoric, and that's not always good either. But um, anyway, let's go ahead and look at today's market. We've got an hour before market opens, so I'm not like thirsty to get in the market, but at the same time, the market can oftentimes set up during this session. So the main two markets I look at are G and NAS right now. So I'm gonna do them one at a time. Let's do GU, which is
Yeah.
trending down right now on the 4 hour chart. You can take a look to see if it's at a risk of not trending down anymore by going up a time frame if you're unsure. Like there's nothing really to the left for a long time over here. It is an extreme zone, but what makes this zone any more valuable than any of these? I don't know yet, so you can go up a time frame. It's what I call anchoring your time frame. And it is, if you can see this right here, the market has pushed up and then flipped for the first time. That's a flip zone, right? This whole area right here is kind of the first flip, but this is the first actual like flip zone in the market where it broke structure. So it came down to that flip zone. That is a valid zone to hold the market. So it is an area that it could switch bullish. We have a sweep of liquidity because as we're coming down, right, we're making lower lows, lower highs, and it comes down. It doesn't really make a lower low, and it eventually makes a higher high internally. But that did create liquidity under here. It took that liquidity, and so let's see. It's not quite flipped that liquidity because if you're strict about it, you can't really count the candlestick that um, is underneath the liquidity. So this one doesn't really count, although for an aggressive trader, this one can count, right? So if it closes above this one, technically an aggressive trader might count that, but in general, I would say you want to count that one. Oh, it did. It closed above this one. All right. So the next wick up, it closed above it. If you're like a beginner to this stuff, you want to do the next piece of structure, right? Just be obvious about it. Like this is the first time it actually pulled back a little bit. Use that one, which hasn't closed above yet, but this is the next wick. That's fine. It closed above that. And so the zone that caused that closure, which happened in here, would be it. And it, right after it closed above, it hasn't came back down and visited that yet. So I don't know, really, at best case scenario, it comes down and visits the zone. So this is where I go to the 15-minute and I'm looking for a trade in that direction. So if my bias is bullish in the zone, let's mark the zone, which is, I can see it with my eyes right there, but we'll mark it. Um, Mark the whole zone just so that we can refine it once we have the zone on the 15-minute chart. So this is the zone, right? Here's the extreme, here's the flip. So what I like to do is have the flip marked and see if it's below liquidity. We have liquidity resting right there. So I like that. That's a good little entry. This is where you could technically even have a risk entry. I personally am not a risk entry trader. I'm patient. I'd rather not. You can get a lot more trades that way, if I'm honest. Like I do miss a lot of entries that I just didn't catch it because I was busy or something like that, and having a risk entry would have got me in. But I like to try to see if I can refine my stop loss, if I'm honest, even tighter. And sometimes I'll even use the 1 minute chart to refine it. I just don't recommend it. It doesn't matter. This is tight. And we can look at what this would look like as a risk entry in pips anyway for that question about the pips. This is 109 up there and 94, 16, and 9, 25 pips, right? Or 16. Oh no, was it 109? Oh, 119, 115, something like that. Whatever it is. It's like 30 pips or whatever. That's a healthy, that's a pretty healthy stop loss. But you're using 15-minute structure oftentimes in that case, so you're getting a good reward. Anyway, and then I like to have a zone underneath it marked. Right? So if the market's kind of fighting, there's some liquidity literally right under that zone, so you can have it all the way up to where that liquidity is. You can have an overlap or whatever, and then alerts or whatever. And that's kind of what I'm looking for. So I'm acceptable since bullish has already happened though. These are the extreme zones, so for quote unquote like the 4 hour chart, I want it to get into these zones. It doesn't have to though. I'm okay with smaller risk to rewards of it taking strong liquidity. So if it sweeps this liquidity into these zones, um, that's a lot of liquidity. It would stop in here. Yeah, I don't think that would stop the market. At minimum, I'd want to see it sweep under here. So points of liquidity that I'd want to see swept before I'm interested in going bullish. And until that point, bearish is kind of on the table, right? Because if you think it's going to go down and sweep those zones, you can have it sweep liquidity, which it just recently has. And so same thing if it flips. So let's mark that liquidity. Because remember, the overall market is still bearish on the 4 hour. Ah, come on, don't be a punk. Sorry, guys. I'm anal about this for a reason. I I tested it being anal about it, so I gotta stay with it. Um, all right, so it swept at this point. This is the last. Right here is the last point because this candle is afterward, right? So as soon as it closed below that, at this point, the market has kind of flipped after sweeping liquidity. So technically, it has swept and gone bearish at this point. So bearish trades are on the table. Technically, you have an entry if it dips under this liquidity right here into this zone, it potentially coming off of it, that's an entry potential. Or if it flips underneath one of these zones and pulls back to that zone, technically entry potential. And then there's nearby liquidity right there. I'm more interested, I like the bigger trades, so I'm more interested in maybe sweeping this first and then trying again for a bearish so I can get a bigger move, or the sweep to go to the bullish side. I'm more interested in that. So I'm not exactly interested in this first little pullback right away. It's also risky to trade against the trend immediately. Anyway, so that's basically it for GU right now. So basically potential pullback. I don't think it's going to stop at this zone if it is pulling back because that's a lot of liquidity. So more like pullback here maybe, question mark, here, question mark, here, question mark, right? And then if it's just a pullback, then it's going to take that high after that, or it probably will. So that's kind of the scenario I'm looking at. So NASDAQ. 4 hour chart. Okay, it's really compressed. I just want to ignore this price action. Let's look at it on the daily. It's just compressed. It's bullish. Has it swept any extreme liquidity to break out of this trend? Not really. I mean, it's sweeping this stuff left and right, but it's so close to this resting liquidity that, eh, I don't know. I don't think it has enough unless we see some momentum coming off there. So we're stuck in a ranged market. So if you absolutely must trade a ranged market, which I just would ignore. I don't care, but I also am in a privileged position where I don't have to. So I understand wanting to make capital when you can. So if you have to trade a range market, let's just go like this. Mark the high of the range, the nearby range. You don't have to mark that high. Don't just be rational with your trades. And we'll mark a low point. The nearby low is way down here. So luckily you do have a little bit of range because that's not really a nearby low. But that is kind of a nearby high because it did stop the market and make that low. So, okay, so we have kind of our range. So let's go to the 15-minute. Basically, I'm going to pull a fib up so that we can just have the 50% point mainly. That's the most important part of this. Wherever the top of that dotted line was. Oh, here we go. Okay. The idea is if you're above this 50% zone, you probably should be looking to sell the market some way or another. And if you're below it, you should be looking to buy the market somewhere or another. We're above it, so let's look at how we sell. Same as I always do, I'm looking for liquidity. I want to see some liquidity swept. We had this double top situation, and right here, it's literally sweeping all this. So let's look for the highest point that it's so far gotten to. Literally the extreme of all these points after this big supply zone right here, which is perfect. Like this is where I'd want to, this might be, I mean, technically for an aggressive trader, we might actually have a bearish scenario coming up right now. Let's see. So we swept this, and now all it really has to do is close below the last point that swept it, which is right here. This wick, this candle that stopped at it, came down, broke through it, right? So that wick right there just needs to be closed below, and we have a sweep and a flip technically, which is bearish price action. Technically gives you reason to follow the trend down. But again, we're in a ranged market. It can flip in whatever direction at any time. So I'd be careful and just target nearby targets, something like this or something, depending on where you get in. And basically, that's how I think about the NASDAQ right now. But honestly, when the market looks like this on the 4-hour to me, like in the, not even, okay, it'd be different if I was like this and it looked like that. Okay, I wouldn't be complaining. But when you're zoomed in like this, when you're on the 15-minute and you can see that it's like ranging overall, when you scroll out, it's not really like leaving the screen in a direction. That's a sign for me to just basically ignore the market. I don't need to trade this, honestly. But I was just showing you guys how I'd look at it. GU is more interesting to me right now. Anyway, any questions or any other markets you guys want me to look at? Sorry. I need to drink some water.
No, any comments? As by the way, remember that today is VIX calendar day. Trading could be very volatile and tricky. I'm still planning to trading, and I'm currently on the Swiss Japanese yen by aiming for 10 pips. It may be my only trade.
Okay, nice.
Yeah, that's Maxi says doing great. Have been really loving statistics lately, and I've divvied into it pretty deep. It's so helpful. What sort of statistics are you looking at, Maxi? Is it similar to the sort of stuff that I was highlighting sort of around this time last year, or is it something else? When it comes to, so looking back at you were talking about your system 2, by the way, as well, Pat. Assumingly they're using the earn as you learn, they don't have a stop loss, from my understanding.
Oh, let me see. Doing a specific system would be how many in system 2 as well. Or take profit and stop loss and pips. Oh, okay, I see what you're saying. Okay, is that so? Lemons, if I'm understanding this correctly, uh, if like if we were looking at a trade, they're wondering basically what they should be uh asking themselves: is this a reasonable stop loss or take profit? Is that kind of what is being asked.
I suppose, yeah. I mean, from what I can see, Pat, that you're on average looking for twice the amount of pips on a take profit than you are with a stop loss. But it's really quite hard, isn't it, to say, saying like 30 pips and 60 pips, because 30 pips and 60 pips may be quite a large amount for a swing trading, but if you look at that, like for instance, like a yen pair, that's not really swing trading. That's almost like intraday trading, for instance. So yeah, I mean, it all really comes down to the system you're putting together. Like, I'll pop my screen back on again.
All right.
I'll try and explain it best as I can, and you can. I'm just going to look at. I'm completely cheating because I already know what what the thing is here. But like, say we're looking at this particular swing trade. I'm on the 4-hour, and so like if you back tested and you know this sort of thing works. I'm keeping it very, very simple. I'm just sticking with a Fibonacci when I'm bearish and we've had a drop where price hasn't given fair value. I didn't put it on here because actually the way that I use my my fibs, as you can see, when it comes down here, it actually does go back inside the golden zone. So I then pop it down to the next point where it's kind of pushed away. And usually I kind of have a bit of a rule that usually there's a bit of a fair value gap that usually determines, unless it kind of creates that fair value back and comes all the way back to my fib entry, which let's just double check that, which it hasn't done. So therefore, I keep on following it down. Hasn't come back. Keep on following it down. Hasn't come back. Okay. So one of the swing trade ideas, I'm with the trades. Could be, very basic, blah blah blah, and coming down there, which hasn't paid off just yet. That could be an idea. Or what you could do is you could take that, and that's 88 pips. Or what you could just do is you could just do the same thing on a lower time frame. Going into that area, let's say, let's see if there's and again, I'm just doing this very, very simple. I'm just using structure in Fibonacci. So let's delete all of this. I'm not even going to look at that. So let's just go, this low creates this high. This is the lowest point. Okay. It's pulled back, failed to create a new high here, and it's within the higher fib zone. And so you can do exactly the same thing. It's just all about what you back tested. And so therefore we can pop this. I'd probably pop it there, and then obviously either target there or because we're going with the 4-hour, we can target that sort of thing. And this is now 31 pips instead of whatever we had before. So it just really depends on the way that you're going to be deploying your strategy. I mean, when you ask for us opinions, we will probably be trading completely different to the way that you're trading. So it's all about how you're wanting to employ, whether you're risk entering, whether you're waiting for confirmation, and all the confluences that you're going to have, and obviously the pairs that you're going to be having as well. Because that's going to be, that doesn't even get tagged in. Oh well. Yeah. So that's kind of my 2 cents on the matter. Sorry, it's a loaded question. I know every setup will be different. I'm just trying to learn to swing trade.
Yeah.
And
I was gonna have.
So the generally when it comes to sort of learning something new, like you can take ideas from us. Obviously, I'm not the biggest swing trader. I mean, Jez is probably a better swing trader than I am, or because I don't swing trade, I know that Jez is better swing trader than I am. But yeah, you really got to sort of create your own plan for yourself because Jezza might tell you a way to follow his plan, but if it doesn't coincide with your world view of trading,
Mm-hmm.
then it's not going to do much for you.
Yep.
Um,
So to
Anything
backtrack,
you wanted to add
yeah, to
while
backtrack
I
on that a
read
little
the notes
bit.
a little bit?
Um, I think that I get that there's a lot of different numbers that come with trading, and so that intimidates people that don't like numbers and stuff, and I understand that. But so the problem is that people think of like take profit and stop loss as this solid, rigid thing, but it's not. It's your risk amount that should be solid and rigid, and that your stop loss and take profit should be the fluid with the shape of the market that you're in, just like all of the other logical things. You're literally creating a logical, rigid system inside of a chaotic market. So the things that are fluid in the market are how big a candle is. That would be stop loss and take profit are based on candle sizes and pip sizes. So that's a fluid thing in the market. Whereas where you draw your fib should not be a fluid thing in the market, and how much capital those pips risk if you fail should not be a fluid thing. But the actual pip number and stuff is fluid with the market. So don't think about it as a set thing that you have to follow per se, but instead let that be fluid and the rigid thing be the dollar amount or whatever it is that you're risking when you make that setup. And let the pip position size and stop loss be fluid with that risk amount,
Yeah,
if
yeah,
that makes
I
sense.
agree. Yeah, because you can like if this huge move here, is gonna automatically come with bigger take profit and bigger stop losses. Whereas if you're looking at sort of like this is still technically swing trading. Like how long did that just last?
Well,
You
also,
know,
even if I
it
say,
hasn't finished, but yeah, it's like a
let's
week
say,
and a bit.
even if pick a market, let's use gold as an example because it's just skyrockets right now, right? Let's use that as an example. If I use a market and I tell you that this is a pip stop loss, well, what about uh next year, right? How's that, or the year before that when you're backtesting? How's that going to apply during a time of stagnation? It might be different. The market could be moving a lot of pips in one day because of economic things and then not moving at all later. So the stop loss and take profit are things that are going to change with your trade. What's important is measuring the market that you're in and using that to logically decide what your stop loss and take profit is. And it might sound um, intimidating, but when you start doing it and you're marking up, you'll see that it just comes with marking up, learning how to mark up, in my opinion. And that's way more important
Yeah,
than some static number. I know
that's
that's
a
not the answer you're asking for. I understand that, but it really is honestly the correct answer.
yeah.
Um, so one more.
Um,
Oh, go ahead. I was gonna read the
One
question.
more question: is it better to use 1 hour or 4 hour for swing trading?
I have.
uh,
Okay, go ahead. Go ahead.
yeah, it whatever you find better. Like I don't find 1 hour particularly helpful, but I don't swing trade.
Uh,
Um, so
One, it depends on what you're defining as swing trading. Because if we're talking like legit swing trading where you're holding probably throughout the week or something like that, the 4 hours literally by definition going to be more helpful in a way. But if we're honest, guys, it literally doesn't matter. For one, so two things. If you're new to the lives with us, the time frames don't matter to me. The market moves in waves and uses liquidity and does algorithmic things, and it has a method to the madness in a way. Or at least I feel like it does. And what I'm reading is my description of that. And um, because of that, I don't care about time frames. So that's one. They're all the same, basically. Like, for example, this, do I still have that indicator? Uh, Yeah, multi-time frame candles, right? Is that? I have one that's in my favorites.
Oh, that's interesting, Maxi. You've looked at the Monday candle as so. What are you testing this on? And are you finding that the Monday candle is generally the kind of almost the Judas swing of the week?
Okay. Sorry. I should read those out loud for the people that are listening to this later. He said, well, here I'll finish the concept of what I was saying. Basically,
Yeah.
this 4 hour candlestick has four 1 hour candlesticks in it, so you're reading both at the same time. So if you're swing trading, being able to conveniently move up and down the time frames is a skill you should learn. For example, I can tell you right now that this leg right here on the 4 hour is a wave on the 15 minute without even looking at it, without even having already marked that up. I can see from the price action on the 4 hour because of the skill I picked up, and you can see where it did in fact have a wave and pull back just because of the distance and the way the candles move. Um, all of this was like choppy.
We're still on my screen if you're trying to display something in your screen.
Oh, sorry. Okay. Let me flip over to mine. Professional as heck. Um, sorry. Yeah, what I'm trying to show is that this is clearly a wave on the 15 minute, as opposed to this little leg on the 4 hour. And this would look like messy, choppy price action up and down, like not just single candlesticks, but little waves on the 15 minute. So let's go to the 15 minute and take a look at that. Right, and there it is. Messy, choppy, little waves down. I can tell you that without having gone to the 15-minute chart because um, you get used to the skill. So I think being able to go across those time frames is more important than deciding this is the time frame that's better. Does that make sense? Again, another fluid answer that is not exactly what you're asking, but man, it really sucks with trading. Unfortunately, the answer is almost always it depends on you. It really is. And so I think don't worry about the time frame. Focus on combining the time frames in your head, understanding how to read them and their relationship with each other. That's more important. Um, sorry, I'm gonna read because you guys were talking about his other question, and so I want to read it. Uh, one more. Oh, no, no. Oh, someone said it's high and low timing as well as bias, so the whole plan is based on probabilities. Only the entry is framed in a more subjective way. I somewhat agree with that. It's all subjective, but I hear what you're saying. The entry is what you're deciding whether you should get in or not, and the rest of it should be like a checklist. Um, and then you said, so when the first 30 minutes of New York are bullish, for example, I filtered through a couple scenarios to see when it's very likely to close bullish. AM session combine this with the high-low timing, and you got a model. Scenarios are basically coin flip. Oh, some scenarios are basically a coin flip. Some scenarios are 75+%. Oh, is this what yeah, and I did something similar with seasonality is tested over 30 plus years to be able to predict a weekly candle after Monday's close. Okay, that's what you guys were talking about. Something similar with seasonality is tested over 30 plus years to be able to predict the weekly candle after Monday's close. So I'm still trading with ICT concepts, but use a statistically proven framework for bias, which was a thing that was missed really. Okay, sorry. I just wanted to read that out loud so that we can know what you guys were discussing.
Yeah.
Um,
I assume that Maxi is kind of with the IC concepts. It's generally the you've got the power of three, which happens in pretty much every single candle. You've got the open, the manipulation, and then the expansion, and then the close,
hmm
uh, which pretty much happens in all the candles. And I think there's an ICT teaching on weekly cycles where it's
mm
they go through where Tuesday is more often than not during London or New York is either the high or the low of the week.
Yeah, that makes
Um,
sense. Makes sense.
yeah,
I will say I can't speak on like any other trader style or anything like that, but I can absolutely say that there is factual, proven cyclical things that happen throughout sessions, weeks, and days, and things like that, and there's a correlation to it. So,
absolutely.
yeah, totally understand looking at that
There's
kind of
a
stuff.
reason that quite a lot of traders trade the Tuesday, Wednesday, Thursday
Mm,
because the Monday generally is that kind of manipulation.
That's part of the reason that I wanted to do the lives midweek and plan my schedule around it because it was at the time and usually best trading time. Not necessarily today per se, but the midweek. Yeah, Tuesday, Wednesday, Thursday.
Yeah.
Any other questions, guys, or any other market that you'd like me to look at before we call it tonight? We got a little bit of time to look at stuff. It is at an interesting point. As you see, I pulled GU back up and marked this little
This is a
liquidity
very
low.
interesting point.
I did say I would like it to come down and liquidate further just because, well, I don't know, there's a good amount of distance here. So what I'm going to do is if once it comes down and liquidates this, if it comes down and liquidates this, I'm going to go ahead and flip to the 1 minute and we're going to see. So just like, remember how we showed a fib and then went into the smaller time frame and did another fib? The same thing with liquidity. I will go to the 1 minute and we will look to see if the market takes some liquidity and flips the market on the one
Yep.
minute and just take a look. I'm not going to be doing any trade on it. I don't like to trade the 1 minute, and I definitely don't condone people really trading the 1 minute this way. So for the reason why, anyone who's wondering why don't you condone the 1 minute if this stuff all works? One, it's easy to manipulate a single 1 minute candle. It's easy to manipulate an hourly candle. So the 1 minute means nothing, kind of, in a way.
Yeah.
It doesn't mean nothing, but until it gets to the most extreme point, it doesn't mean that much. It could all be manipulation. Every single candlestick, even the most liquidity
Yeah.
you could possibly see swept. The other reason is the temptation to get a trade that looks like, okay, so here we have a sweep of this point, right? And then it flipped and closed above, arguably, let me see. Or wait, where's sweep happens here for the first time, but then it sweeps that sweep point. So the point where the sweep happens, right there, closed above it. Okay, well, it didn't really happen right there. If you were aggressive, you could probably go to the 1 minute and find an entry. Let's do that. I just want to show people why I don't like the 1 minute. Okay, so we have a strong sweep at this point, and then we closed above it right here. So the zone that caused it, for a really aggressive trader, this is literally the zone that caused it. And oh gosh, how awful. This one actually looks like it could play out. And I don't, no, maybe not, maybe not. No, it's a loss. And here's why. I don't want to get traders tempted. Here's the zone that caused the flip. Let me use that zone, that tiny little zone right there, and enter. The market comes down, fills you, and you feel like a champion because you have like a 2 pip stop loss or whatever this is. I don't know what this is, but it's a tiny little stop loss, right? And you're aiming for the high or whatever. And on the 1 minute, you have a nice, and it feels good when it plays out, right? But there's plenty of liquidity still to be filled under here. Very often you will get stopped out. You're not going to get those. How many pips is this? Let's look. This might not even be that. This might be a lot of pips still. Anyway, 525. Well, it's 5 pips, right? So there are people out there that do 1 and 2 pips. So you can see how stressed I am about 5 pips. That's the temptation I just don't want to see traders do. That's all I'm trying to say. I don't want to see you risk your $500, $1,000
Your
capital.
GU's just about to take liquidity, FYI.
Okay, let's take a look at it. Yeah, I just don't want to see you guys risk your hard-earned money or your what is it called? Your funding capital to risk on a pip or two or something like that and get that temptation. It's just not worth it, in my opinion. So that's my opinion. You can, of course, apply this stuff to all the time frames, but that's why I don't condone
Okay.
the 1 minute.
The big heavy hitters are going to be done on the higher time frame. It's a lot harder to manipulate those 4 hour,
Mm-hmm.
daily, weekly, monthly candles. Like,
Especially if you're targeting like a leg of the time frame. Yes, it can absolutely be manipulated. Anything can. There's a lot of money in the world to be moving things around,
mhm,
but in general, you're on the right side of the trend. You're probably going to be right, right? Whereas on the 1 minute, maybe you'll be right, and I don't like that. And it's not fun for new traders, and I just don't. And plus, I want to teach people to be patient. 15 minute, it takes a while to enter and exit a trade, and that's okay. Live with that. Be okay sitting on your hands and look at me. I'm just sitting here, right? There's lots of temptation, I'm sure, especially when you're new. It's in a demand zone. Oh my gosh, it's getting real low in that demand zone. What if I just pulled the trigger now? I get stop loss under here. That's a pretty tight stop loss, especially if it gets down to the bottom of this candle or whatever. I've gone through all the narratives. I can probably say anything that any of you guys have probably thought of. Sorry, I dropped something. Give me a sec. Yeah, I could probably say anything that you guys have ever thought of in your head because I've gone through a lot of different cycles trading to get to where I've gotten to today. But yeah, I'm just waiting. Oh yeah, I did say though I'd go to the 1 minute. Let's take a look. So We're running close on time, and it does take 1 minute per candle. Okay, you know what? Just for the I don't know if I have.
Don't do it. Don't do it.
Oh, I don't think I have.
I'm the little guy on your shoulder. Don't do it.
Oh, I do. Okay.
Oh, you got the 1 second up.
Yeah, let's do a better time frame than that though. Yeah, okay, 5 seconds. Okay. All right. So we have the liquidity. So now I just need some strong liquidity to be taken out on the 5 second time frame, guys. So this, okay, I don't condone this. I hate even showing this, but I've never done this for you guys. So I'm just going to show you guys that to me, price action is all the same. Okay. So we're creating a strong point of liquidity right now as we come up and take this high out maybe. And that means that's what I want swept, right? Strong point of liquidity. Okay. I cannot believe I'm doing this. I don't. Please don't trade the 5 second. Do not apply my concept. I literally am saying right now, I don't want that. Do not ever apply my concepts to the 5 second, even if I show you guys that it could work. Okay, it's just for fun, because it's fast, and I want to see some price action. And I do believe I've literally never even actually done this before on the 5 second. I just believe to the bottom of my
10
heart
minutes
that.
before London opens is not probably the best time to be doing this as
Oh
well.
yeah, that's true too. Yeah, yeah. I wasn't even thinking about the time where London's about to open, but I just believe to the bottom of my soul that this stuff works across all time frames. So we're gonna go ahead and so I have a technically strong liquidity right here, although that is arguable as hell. So,
Hmm.
but for the sake of just messing around, I'm gonna call this my strong liquidity, even though it did not for a second close above there, which is a dead giveaway sign that maybe that liquidity is not that strong yet. Um, I want to go down to the 1 second just to let's take a look. Boom, boom, boom. Technically, we have a closure. Technically. Well, no, because it jumped up and started right here and closed down. So no, we don't. We don't even get a closure on the 1 second. That's not a good sign for it to be strong liquidity. But for the sake of argument, this is gonna be our strong liquidity. So for anyone wondering or is new to my concepts, I'm waiting for the market to take this out, even by a pip, and then use that liquidity to flip back the other way and close above the point that swept it. So we'll talk about when it's swept. Let's go ahead and let me clear the chart. Let's just mark the single point of liquidity that we're looking at now. Oh, market, 10 minutes to market. Okay. Did it sweep this actually? Nah, it like touched that. That makes this
Probably on another.
that kind of makes this my strong liquidity though. It just feels real tight for a 5 second chart, but we'll see. That's not a lot of distance. I'm gonna keep this marked anyway. Okay, I do gotta say though, this is where I'm like looking for bullish price action. You see how the market is teasing me for bullishness? Like it was going down, and like I'm like this is where I would look for something bullish. I just want to see it swept, and it is. It's teasing me for bullish. So the stuff is accurate, is my point. It's not. But how you get in the market is way more important than being able to call the market. Being able to call the market is the easy part.
Hmm.
It's super easy to call the market. It's really hard to trade it. Yeah, we definitely have strong liquidity though. This is it. Strong liquidity on the 5 second chart.
Yep, yep.
We're probably not going to get to see anything happen, but I just want to show you guys uh, how this stuff works. And I'm kind of hoping to see it on this tiny time frame for the fun of it. Just know that the chances of it playing out are astronomically small. Even let's just say whatever system I'm about to deploy has a 50-50 rate. But on the 5 second chart, it probably has like 250 entries in a session, which means I could have one of the
Yep,
125 losses right now. So don't
yep.
you guys got to think about that when you're entering trades, which also means if you're going to get down, so if you're going to get your down and get on the 1 second chart or the 5 second or even the 1 minute chart and you're going to trade it, you can't then take two losses and then turn around and be done if you have like 7 trades for that session. I'm sorry, like I know there's the loss limit thing, and this is another reason I don't condone the 1 minute because you should have a loss limit, but you
Yeah.
are going to skew your
Yeah.
results if you can only get to take 2 of your trades out of the 7 opportunities you get or whatever in a session. I
Yeah.
mean, I don't think with the way I trade, I don't think you get 7 on the 1 minute chart, but I'm just saying, like I'm giving you a point, right? On the 5 second chart,
Yeah.
you might get 7 opportunities, and you'd have to take them all to get your stats because that's how trading works. If that's your session.
Yeah. That's the
Um,
edge.
yep.
Catchy tune. What does it mean that there is a point that sweeps liquidity? Is that about the point which sets up the sweep, or is it a level that the price needs to hit?
Both, literally both of those answers are correct. So, what does it mean that there is a point that sweeps liquidity? Is that about a point which sets up the sweep, or is it a level that the price needs to hit? It is literally both to me. So, I don't know if his answer is
I
gonna be
suppose
different.
they might have been asking about your specific point of liquidity, what you're after. That's the only thing I can think that was what the question.
So when I use the words, I try to, so just like in science, a lot of things have terms. So we'll like put a term on something and it's like quote, quote, absolute. It's so that when I'm explaining to you in a language or in any language, I'm giving you the definition of this thing and we know we're talking about the same thing. So oftentimes I try to use terms that I stick to every time I talk about them. And this is kind of one of those. Point of liquidity. What I mean by point of liquidity is the minute the mark, it breaks a high, right? So high, low, high, low. So if it flips, it breaks a high, which it tagged above it right here. It didn't close above it until here, right? I look for the point that caused that. So here's the break, here's the low point that caused it. So let me box this whole thing from the start of it to when it was broken, and then the lowest point in between. So when this gets broken out, I'm looking at where's the point of liquidity. Liquidity is what caused it. So I'm looking at the bottom of the box. You see how the market came down and traded lower and lower, stopped right here. But however low it was going, all the sellers that were moving the market down got stopped. Buys came in and didn't let the price go any lower. Not only did the price stop there, it then went up. It went up. It didn't get any lower than that. So no new sellers could push the market any lower, and buys stopped the market again and pushed the price up. So there's a lot of buy money right here. We know it. Like without, I don't know what's going on there, but I can see on the chart there's physical evidence that a lot of money, enough money to push the price of Forex, which is, I don't know, GU is probably like $600 billion a day or something like that, of the 6.6 trillion that's moved around. I don't know. I forgot the percent. It's like 14% or something. Crazy. I don't know. It's high though. Um, and so, it's a lot of money, right, underneath those points. Big, they might not even be stop loss. Some of them are stop losses, and some of them are people trying to push the price lower or absorb that. And some of it are buy orders that didn't get triggered, right? And so that's how I got to think about it. So where would even bigger money, even sneakier money to absorb even this liquidity right here? It's obvious. So everyone in the world sees this liquidity or this one, right? Everyone sees it together. So it's an obvious target to fill big orders. Well, I'm a broker, okay? I'm the market maker, and I have to fill $1 billion worth of orders somewhere, of buy orders. I have to fill those orders. So they put those orders in low, but I have to get that price down there. How am I going to get the price down to that level? Well, I will wait to fill those orders until the market goes and triggers enough people sell orders to absorb them. So I'll let the market fall and trigger in my sell orders or whatever when I'm buying and selling from my liquidity provider in a chain of events to move the market down and get it to where it triggers both the pending orders, the stop losses, and the obvious liquidity points, and it'll trigger and fill those orders. Then I can offload those to the liquidity provider at that extreme amount of volume from both sides to absorb them and fill some of that order. And oftentimes there's a bigger order that moves the market up than was even than can be absorbed by this, so there's leftover money for later sometimes. So the market will come back down and touch again, which this would be that double touch because it already tried that. So if it sweeps this liquidity, it's done. It needs to sweep this. I'm dubious of this right here. I want it to sweep this in the first place, honestly. So,
Hmm.
uh, just because this is a 5 second chart, those are dangerously close. Uh, but that's kind of the concept. That's what a point of liquidity is. It's where did the market break the high? What is the lowest point, or from a high point, where did it? So lows start getting broken here. So the point that broke it, there's some, strong liquidity on the internal trend right here. This is strong swing liquidity, this is strong internal liquidity right now. Anyway, does that make sense? That's what point of liquidity is. And a sweep of that is the minute the price gets 1 minute lower, I mean 1 pip lower, like it trades lower than that at all. If it technically, I think this is a tiny little bit lower than this is, which means this is technically a sweep, which means that would have been a potential entry right here, technically. But I want to see this get swept, if I'm honest. It's a 5 second chart and it's market open.
We gotta stay on for market open now.
Yeah,
Just
I
maybe
kind of
5
want to
minutes or so.
yeah, I kind of want to do that. Yeah, let's do that. What was I gonna say? Yeah, that's what point of liquidity is. Sweep is just when it trades under. So let's say this is my point of liquidity, okay? Right here, which it is actually. Oh my gosh, this is technically strong liquidity right here, and I missed this because I was so focused down there. It swept that, it flipped it. So right here is actually a potential chance to technically so when you're doing this and you're using a 5 second zone to enter, you also would have to take a 5 second target. So you'd have to do something like that, right? You don't want to use a higher time frame target. You're just using the leg that pulled back. So if I was in the market right now, technically on a trade this aggressive on the 5 second chart, I'm using 5 second liquidity because it's a 5 second liquidity sweep. It's not a 1 minute or whatever. So I can only take 5 second liquidity out. Does that make sense? So my trade would look like this and I'd be out. Even if it goes up here, I don't care because I'm using 5 second liquidity. So hopefully that makes sense to everyone. Oh, nice. Only on the 5 second chart does it play out in 5 seconds.
Right, we didn't even need to be about for a London Open.
Yeah. But anyway, so yeah, so the idea is when the point of liquidity is swept, that's what the sweep happens. When I consider it a bullish sweep is when it closes. So here's the point that was above the last point of liquidation. So here's where it was liquidated. Where's the last wick above it? Right here. It closed above it right there. So the zone that caused it was right here. So that's where I entered. Boom, it came here and teased me, and entered right there. This one is inside that zone, so it'd be where you entered. And you exit because you're using 5 second liquidity right here. If you believe that this is a trend leg continuation, you could technically target that. It's a 5 second chart, man. That's scary to do for no reason when you could just target that and take your win, right? That was 2.7 times your risk. That's a good little trade in 5, 10, 15, 20, 25, 30 seconds, right? What? 5, 10, 15, 20. Yeah, 30 seconds. Oh my God, I can't even imagine being in and out of a trade. I'm sure the scalpers in here are like laughing at me, but I cannot imagine being in and out of a trade in 30 seconds. That's that sounds like heaven in a way, but I don't. The Also being out of a trade on a loss in 30 seconds would not be fun. I would not
Yeah.
enjoy that so much. So, okay, yeah. So here's market open.
Yeah.
It swept.
My quickest trade was 2 minutes. I've ever done.
Yeah, that's really good, man. That's
that was
fast.
that was a DAX trade where this is when I was still using Kanga,
Okay,
the Kanga stuff.
nice.
I
Yeah,
got an
yeah.
entry, I entered,
What?
and it was 5 minutes after London Open, but it just decided to wait 6 minutes before it just suddenly skyrocketed. I was just like, all right, cool.
Yeah. So you guys see right here how it
Catchy
swept
tune.
this liquidity?
The point that
Flip,
sets up the liquidity
held.
is.
You could. Sorry,
Say again.
I just want to show people. It swept this liquidity, it flipped and closed it, right? And it came back up. It's filling that area. Technically, that is a potential.
Surely you're not going for a second one.
No, no, no. I just wanted to
Surely not.
show. I just want to show. I would never trade the 5 second chart even once, but actually, it would just be a little continuation to sweep that at best, if this worked out. Oh, and then we got a loss super fast
Nope.
too. So
There you go.
yeah, there we go. But anyway, yeah.
Catchy Tune says the point that sets up the liquidity is the first time it got down to that level.
Yes. It creates the
I guess
liquidity
we're
by
gonna have to trade
becoming.
the 5 second chart now.
So it
On a
becomes
zero spread poker, it could work. Yep. I don't think about the fees here.
Oh yeah, it's plus. Oh my God,
Would
I
that
did
even
not
work
even.
with spreads?
Yeah, I didn't even consider that. So that's the other part of the equation I didn't even bring up at all when to talk about this. I literally don't have to worry about commission and spread anymore. Being on the 15, so that's the other reason. On the 15-minute chart with modern day brokerages, the spread is so low and the commission's so low on my
Pretty
positions that
negligible.
yeah,
Yeah.
I literally don't even notice it. It doesn't matter. And
Yep.
it's
Yep.
all
Yep.
break-even trades pay for it. Like I set my break-even trade to be literally dollars more than the commission and stuff. It's negligible. So on the 5 second chart, the opposite would be true. It would be astronomically important for you to pay attention
Oh yeah.
to the spread and the oh my God. I don't the brokerages that I trade for my Darwin X, the main one that I trade, would not the spread's too high for the 5 second. I wouldn't be able to do it. It'd be insane. That stop loss would
Mm-mm.
be possible.
No.
Anyway, as you guys can see though, the original zone that was from the 15-minute, yeah, that liquidity sweep right there that could potentially start going bullish did in fact start going bullish, and we could see it as early as the 1 second chart was my point, and I just wanted to kind of point that out. Now,
Yeah.
the sweep happened here, and I missed it, and yeah, there was a potential to target there, and then as you could see, remember that it was a 15-minute. Now the 15-minute hadn't flipped yet, but you were in line with the 15-minute structure, so technically this is the part where you can target like 15-minute structures and stuff like that and get huge risk rewards,
Yeah.
and it looks nice on the 5 second chart, but again, don't do that. This was just for fun to show you guys because it's moving. I wanted you guys to see that these concepts work across every time frame. It just is the way the market works in a way. But it does not mean your trade is going to play out, right? That's the important part for
Yeah.
you to understand. It does not mean, look, that trade
Yeah.
played out just as fast as this one as a loss, and they both could have easily been that. We could have had two losses in 5 seconds, and you got to remember that. So anyway.
Yeah. So many difficulties when trading that lower time frame is just unreal. I had a guy who had really good knowledge of the market and whatnot. He had a really good plan, but the plan involved the 5 tick chart, and every time he would try and trade it, it's just like shit would happen. Like he just he wouldn't get in just the right moment. He like and yeah, shit would go
Yeah.
sideways
Yeah.
because you're not that quick enough.
Yep.
You can't be that quick, which is why 5 second, 15-second trading is not viable
Yeah.
because there's so much human error involved as well.
I 100% agree with that.
Mm.
So on the 5 minute
All
we
right,
have.
I'm gonna go and eat something for the first time in
All right. Yeah. Well, yeah. That's time. I was just to say
70,
to get
76
off.
hours.
This is a bullish shine, earliest possible. Not on the 15 minute yet, but on the 5 minute, it did close above the liquidation point. Earliest possible sign that it could be continuing bullish. So I'd be wary of bearish trades at this point. Not. I still really want to see the swept. So, but I'd just be wary of bearish trades. That's all I want to say. But
Hmm.
anyway, all right, guys. Thank you
Oh
all for
yeah, and
coming.
I'm not gonna be here the next couple of weeks, by the way, guys. So you're
All
just
right.
gonna have to I don't know, go back and listen to my voices on old recordings if you want to hear my voice.
Yep, that's all right. I'll be here, and we will miss you together. Enjoy, man. Enjoy. I'm gonna go
Thanks,
to
man. I
yeah.
will. It's going to be a minimum of 2 weeks that I'm going to be away for. Potentially, I'm going to be taking my computer to England, and when I'm sitting around with the in-laws, having cups of tea and biscuits or whatever they do over in England,
Pretty much.
maybe I'll jump on and do a live as well. But we'll see how we go.
All right, man. Well, I hope you really enjoy it and get lots of. Well, you already live somewhere where you're always getting sun, but get that sunlight, Egyptian sun, and
Yeah.
and the rain, the English rain.
Well, I'll be. It's just coming out of it's. We're in our month of autumn now, so it's the first month of autumn down in Australia. So, going to be going somewhere where spring has sprung, and hopefully the weather is much. Well,
Ba-
the weather here has been pretty good here, so I can't really
Basically, you're
complain.
hacking life and just trying to avoid winter. I see how it is.
I'm
W-
just I'm
I'm
trying to be like those cricketers. They just follow the summer all the way around the,
right.
the
Yeah.
world.
Right.
I'm going to be a cricketer.
Hell yeah.
Yeah.
All right, y'all. I'll catch y'all next week. I guess it'll just be
Catch
me
you
this
later.